forward. For the time being, let's say hello to our first guest on the show. James Knightley, Chief International Economist at ING, is with us. James, good to be having you in. Let's just start right there. As you're looking at, the India market and the macros here, how do they stack up? Because that inflation print has been looking benign. There are expectations that growth is going to be topping 7%. Of course, the equity market is still very sluggish. That's a different story. But how do things look here?
Yeah, they don't look too bad at all, really. Things are certainly moving in the right direction. And we're starting to see more houses talk more favourably about non-developed markets, equity markets. So, we're looking at sort of what's going on in Asia as being a more interesting story, really, given the valuations that we've got in the United States and also to a certain extent Europe as well. So the fact that they've got relatively subdued equity market performance may start to see more flows start to emerge into some of these markets as well, such as India.
James, what about the U.S. itself? Now that this shutdown is ending and we'll finally, get out of that blind spot and we'll have more data come in, are you of the opinion that the U.S. economy will show more deceleration, which means those hopes of more rate cuts from the Fed are very much intact?
Yeah, I think we've seen a bit of an equity market bounce over the last couple of days on hopes that we will get this reopening coming through. Partly that is because that will unlock all this money that hasn't been spent by the government. So it will mean that 3 million workers will start to receive more pay. It will mean that people on those SNAP food program benefits start to receive that money as well. And this is a substantial sum of money that will help to recharge their coffers and allow spending to pick up. So that's one positive. It removes a key headwind to growth. And of course, also remember the travel headwinds that we've had here in the United States, the problems with the shutdown that has led to air traffic control having some problems. So there was real concern about what that would mean for the Thanksgiving heavy shopping period as well. So this is a positive development from that perspective. But at the same time, we've got to remember that the data we have been getting, the Fed isn't completely blind. There's plenty and plenty of other alternative sources, various surveys and third-party data releases, and they have been pretty subdued. Business services have been okay, but outside of business services, things are looking much more subdued, especially consumer confidence and especially those jobs numbers we've been getting through. Those are looking increasingly weak, and that's given the Fed's mandate, so its dual mandate of price stability and maximising employment, we think still leaves the door open to that Fed rate cut in December.
Okay, all right. So another rate cut, and I think you had mentioned that, right? You were factoring in two, one in October and the other one in December. Let's talk about another asset, actually, that went on a back burner just, the last couple of weeks, which is gold. But yesterday it sparkled up yet again. What's the view out there? That's the one that had the big rally, went quiet for the last month or so, and it's perking up yet again. What are the targets out there?
Yeah, I don't personally cover the gold market, but certainly you can see it as we know that there's plenty of cash out there, and there are concerns about some of the valuations in some of the equity markets. Some people are looking for alternative destinations to park their money, and gold is still seen as a relatively attractive destination. So still seen as supportive fundamentals in this time of economic uncertainty, and especially when you've got plenty of American CEOs questioning some of the valuations that are out there on the equity market.
James, a bunch of more questions, but out of time. Thank you very much for joining us with that quick chat. Appreciate it here on CNBC TV 18.